What's up? Sean from Invest to Live, and we're going to talk about PayPal today. Today, right now, the recording of this, I'm going to pull it up live because I think it's important to give you an accurate number here. Um, PayPal's getting crushed along with other similar types of companies like Square, for example. Now, in general, the market's getting beat up pretty bad today. Square's the first thing I see, currently down 11%. And I wanted to talk about PayPal here for a second because I have a feeling this is going to look pretty rough. Let's see, PayPal, where are we? PayPal is currently down. Holy moly. PayPal's down over $45, which is just about 26%. Okay. What I want to go over is their investor presentation. I want to be very clear here, first and foremost. I do not work for, interact with, have a relationship with PayPal. I do not use their services in any capacity whatsoever. I'm not an affiliate. I'm not an advisor, nothing like that. I study investor presentations and I know finance very well, so I'd like to look at these the day after. I think that a lot of folks probably don't do that because there's sort of a general sense of maybe not feeling very confident about your ability to do it or whatever the case is. So I just want to go over this. But what I want to start off with saying is we have to sometimes separate the company from the stock, okay? If you only look at the value of anything based on a current share price, you can miss lots of things about a company being good or bad, indifferent, anywhere in between. And I think this is an important call out because these reactions are not due to necessarily bad news. They're due to missing what analysts think should have happened or could have happened. Now, I'm not saying that that's not important. I'm not saying the role of an analyst doesn't matter, but sometimes, these huge moves, you have to ask yourself, like, why did we think that analysts were right? How were they so wrong? How could the company have missed by so much? And remember, every analyst has a different way of looking at things. Tom Nash speaks a lot about the DCF model and how they use that to value companies, but everyone can turn knobs and pull levers in different kinds of ways. So I just want to share the presentation because I don't think a lot of people have time to go through it. And I think that at scale, this can cause a lot of fear without understanding the numbers, right? Sorry, just want to double check that price too to make sure it wasn't wrong. That was surprising. I like to go over investor presentations because they're prepared by PayPal in this case to show lots of highlights. And it's not that we don't want to look at the negatives, but I start my investment analysis on the company, not on the share price, not on the stock value, not on the market cap. Those are all derivatives of what's happening at the company level. So I start at the company level because that's, what I'm doing. So I don't want to waste any time here. I'm going to jump right in and share my screen, and I'm going to go through their presentation. As I'm doing this, just reminded everybody, this is a channel about education. I'm not a financial advisor. I'm not your financial advisor, excuse me. And I'm not providing financial advice here. I simply want to give my take on this company and what they're doing. So let me just figure out how to share my screen as usual here. That's always my hardest part. Okay. And I'm gonna just make sure I'm presenting this. So this is the actual deck that they went over during their call. This is the investor update deck from Investor Relations. You can see it was dated from yesterday. So I want to take some time to jump in here and look at the numbers and provide some perspective. The first thing I want to call out here is PayPal is a known. It's been around for a long time. It's a very successful company. They have huge market holds across many different areas. So to see a price drop by 25% is always very stunning. It doesn't mean that the price drop is wrong, by the way. It just is sort of surprising to think, how could everyone have been a full quarter wrong on everything across the board here? So let's jump in and take a look at some of these numbers. First and foremost, as always, this is their forward-looking statement. Essentially what it's saying is don't make any decisions based on data that is not based in today's reality. So what it typically will mean is they're looking at non-GAAP financial measures and forward-looking statements, what they're planning or hoping will happen, etc. So always know that when you look at a presentation from an from an investor relations team, this is a common slide. You have to make sure you're not making decisions on what they think will happen, but on your own analysis of what you believe based on historical results. That's very important that you do this work. I want to tell you what I hate about this slide. First of all, I'm trying to think of where I put my picture here. First of all, there's too much on this slide, okay? So what I don't want to do is scare everybody by looking at it. But long story short, right? they are using a lot of like these like TPV, right? These little weird things that mean different kinds of stuff. What I'm going to do is scroll all the way to the bottom. I want to show you something here really quick before we jump into the rest of the deck, because I think it's super important. So they have definitions in here, right, of what these different terms mean. So TPV is total payment volume, is the value of payments net of payment reversals successfully completed on payments platforms or enabled by PayPal via partner payment solution, not including gateway exclusive transactions. Let me explain this in really layman's terms here for a second. TPV is basically all of the positive transactions they've received at the end of the day for the time periods they're looking at. The reason this is important, it gives us a baseline to understand what we're looking at and how it's measured. So when we look at this, in 2021, total payment volume reaches 1.25 trillion, okay? And not including eBay growth or revenue, they saw a 29% gain. 2022 TPV is growing to 1.5 trillion, and revenue is expected to exceed 29 billion. Let me call this out because it's important. There's all of the money they pull in across all transactions, which doesn't belong to them, that's given to the vendor. And then there's what revenue they make on it, which they're expecting to exceed 29 billion. Okay, so just to set the stage here, make sure everyone understands the market and how this works. It'll be very similar for competitors of PayPal as well. So what I don't want to do is read through all of the things on the screen here, but I think it's important you understand that's how we're looking at this. So the next piece of this is really the summary for 2021, and this is where I want to start. So active accounts, right? 426 million active accounts, which include 34 million active merchant accounts, right? They're up 13% year over year. 49 million net new active accounts. Customer engagement, 45.4 payment transactions per active account. Essentially what that's saying is if you use PayPal, you're using it about 45 times on average. This is up 11% year over year. Total payment volume, 1.25 trillion, we saw on the previous screen. Let's talk about these numbers for a second, right? 33% spot and 31% FX neutral year over year growth, 38% spot and 36% FX neutral year over year excluding eBay. Now, let's take another pause for a second, because I think if you're watching this, and I hope you're really interested in this stuff, this is how you understand a company's business and their numbers. This is not bullcrap. This is not opinions of famous people sitting on CNBC or wherever else. This is how you actually read this. Okay, we keep mentioning this excluding eBay because we know eBay is a massive piece of the business for PayPal. So I, as an investor, I care about the eBay revenue, but I want to make sure they're competitive in markets that don't include eBay. Like we saw Square was down huge today, not as big as PayPal, but like they're competing at some level. So if Square's growing their non-eBay business in a huge way, but PayPal isn't, that means Square's winning. So they need to represent both sides of this. And it's not just about Square or PayPal, for the record. There's lots of people in there. Now, from a revenue perspective, down below on the left, we see 25.4 billion. So again, this is up 18% spot and 70% FX neutral growth, 29% year over year growth excluding eBay. And the 2-year spot CAGR is 19%. Okay, these are really good numbers. It's showing growth within the company. And again, maybe not the growth that we wanted to see from analysts, but it's a big deal. And then also, just because I like to make sure people know what I'm saying here, CAGR, what I'm calling CAGR, is the compound annual growth rate. Okay, so how it's growing over time, compounding. That's on revenue. Now, in the non-GAAP EPS or earnings per share, they're looking at $4.60, up 19% year over year. And this also, as you can see here, it includes an 85-cent per share headwind from lower eBay transaction margin dollars. And this represents a 2-year CAGR of 25%. Of course, you can always read down here below and what some of these caveats are. And the free cash flow, which to me is really what I look at all businesses on. I don't care how much revenue you make. I don't care how much volume you do. I don't care about engagement. I don't care about active accounts. I need to know that you can actually pay your bills and have money to grow with. So free cash flow for me is a big deal. That's sitting at 5.4 billion. Dang, that is 5.4 billion in free cash flow. Wow, that's pretty cool. Up 9% increase year over year, and it represents 21% as a percent of revenue. Okay, so just to be clear there. So some really good numbers here. So again, if you saw these numbers yesterday, you'd say, wow, PayPal is a company that's been around for a long time. It's got tons of accounts and growing. It's got great customer engagement and growing. Its total payments are growing. Revenue's growing. Non-GAAP EPS growing. Free cash flow growing. And the reason I'm sharing this is you don't need to panic every time a stock price goes down. You need to look at the numbers and say, are you seeing things on here that make you think you need to exit this position, right? This is not financial advice. This is life advice, team. If you look at the actual numbers and you don't see anything here that scares you, let that help to drive your decision making, whether you hold on to a stock or buy more or sell or create a hedge or whatever, okay? So fourth quarter 2021, where there's a call out that the 2-year CAGRs highlight strong performance. Okay, so this again is for the fourth quarter specifically. I'm going to go over this a little bit quicker. 426 million active accounts again. That's still the 13% increase year over year, but 10 million net new active accounts in that period. 2% year over year increase in daily active accounts using PayPal core experiences with a 2-year CAGR of 15. Obviously, I'm happy to see all this stuff. Revenue in Q4 was 6.9 billion. Again, you can read all the numbers here. Non-GAAP EPS was $1.11 per share. Free cash flow in Q4, again, 1.6 billion, right? That's a 38% increase year on year. And again, here we are at 22% of revenue. This is the interesting things, right? This is a business that is growing, seemingly doing well. And I think it bears repeating that we would want to really compare this to like Square's earnings and try to match these up as much as possible. And essentially what we're trying to do is standardize on the data and the terminology and how they measure and create metrics around these key performance pieces. And that's not a huge process to do. That's typically done by analysts, etc. Not that you or I or anyone else can't do it. So here's some other highlights they called out. And I want to be clear here too. I'm not advocating that you do or do not buy PayPal. I'm just trying to explain that as a company, there's some really exciting things here. So if you're looking at the stock today and you're panicking, you probably need to just take a step back and look at all of the data before you panic and do things that may not make sense for you long term. Right. So in 2021, we saw a record number of products and experiences launched, as you can read right on the screen here, but some really cool stuff, right? They released Zettle, checkout with crypto. The global pay later footprint has been a big piece from expansion. They also rolled out a new digital wallet. Now on the Venmo front, which Venmo's a huge deal. I hear about it literally every single day. Quite literally this morning, someone asked me if I could Venmo them some money for a gift. And, I literally have to now go and do that. But their Venmo credit card is ramped. They have a buy, hold, and sell crypto on Venmo. They can cash a check on Venmo. And even Venmo business profiles are starting to amp up, which means hopefully their goal, of course, is to get more businesses to be able to use Venmo and create a presence there as well. Again, lots of innovation, lots of cool things happening. And I think their efforts here is they have to compete with Square and all the other major players in the space. This is just calling out some key things around the success of the PayPal digital wallet. And as they're calling it, early indications. This is one of those moments when hold this with a grain of salt a little bit. You can use that as a signal or indicator on how you feel. But let's be honest, stone cold seriousness, it's still really early, okay? So here's what they're seeing early on, right? Driving increases in product discovery and adoption. So from a shopping perspective, over 700% merchant leads. Crypto's up 40% from a first-time user perspective, in-app donations, bill pay, etc. And then also from a multi-product adoption, they're looking at how it reduces churn and increases ARPA. I'm going to be honest with you, I haven't heard of APRA, which because I have never really needed to look at that term before. But right down below here, I'm going to read it to you if you can't see on your screen. ARPA is defined as average revenue per active. That's pretty interesting. So people who are actively using it, it's not dormant on their device. An interesting metric, and just a note, when you're listening to earnings calls and you're looking at earnings numbers, there's lots of these little funky terminologies that if you read into it, you can see why they did it this way. What they don't want is to tell you the total average revenue per account, right? Because there might be a ton that got opened up but never touched or never used. Going to bring those numbers way down. So this is a way to show it in a better light. Strip out dormant accounts as an example. I don't know exactly how they measure it, but this is how they're leveraging against active accounts, right? So users engaging in the mobile app exhibit 25% less churn. Digital wallet and BNPL users deliver 2% ARPA, as we just explained, of checkout only users. Let me see. Opportunity to cross-sell users with expanding set of interconnected features. Of course, very interesting stuff here. The goal here is how do we get users to better engage with the products they're buying, get them to come back and buy more, and then also make sure that they're not losing those customers over time. So it's really tied to customer engagement, how they get you to come back and sell more of product or solution or whatever the case might be. Interesting things to be aware of, and this matters for their business, of course. In fact, churn is a major cost for businesses. So if this is a way to address it, this is pretty strong for PayPal. I don't want to go into too many slides, but I want to call this out. I will admit I was a little bit actually shocked when I saw this, and I don't know why I was. I guess I should have just assumed PayPal would be so dominant, but PayPal is the most accepted digital wallet. Digital wallet acceptance among 1,500 of the largest online retailers across North America and Europe. PayPal sitting at, if I'm reading this correctly, they own 76% of that 1,500 market. Now, of course, you can look at the numbers here. It adds up to more than 100. I think the assumption here is that most of these retailers will typically accept multiple versions of payment and wallets. This just goes to show PayPal's really got a dominant position, and I would imagine that's because they've expanded off their core holdings. But this is pretty interesting. So I thought this was something I wanted to share as well. Let's keep rolling, right? Recent partnerships and expansions with enterprise merchants globally. I'm not going to read everything on the screen, but I think you can clearly get a feel here. Like, it's a lot of different types of companies in different industries. The global footprint is growing big time across a number of metrics, measures, and locations. So just some of the quick financial results, right? Almost 8 billion transaction volume. Look at that, 12.2 million unique customer accounts, 1.2 million transactions from a BNPL perspective, merchants with upstream 92K. And then they break down the eBay numbers. I don't want to break down eBay numbers because I think this is easy enough to look at the screen here, but eBay is obviously where PayPal really got its start, right? So eBay impact on that total, that TPV and revenue essentially represented 3% of revenue, less than 3% of TPV. The reason they're putting this in here, right, is really obvious. And I hope everyone at this point, you're doing due diligence, you're learning how to read this. The reason they're putting this in here is because they want you to start seeing, like, hey, look, we don't even need eBay to be super successful. It's almost nothing for us. Now, eBay, of course, is important, and that 3% is a lot of money. But they're basically trying to say, like, look, we don't live and breathe and survive on eBay. It's a small part of our business. It's great, but it's a small part of the business. I think this is a great call out and makes me feel comfortable as an investor. Some ESG stuff. So just some things they're doing that are positive, right? Giving back communities, how they focus on donations, et cetera, right? We got some business updates as far as volume and growth over time. Obviously, cross-border trade is really big. I'm not going to get into these details because it's just not a specialty for me. We're looking at how active accounts have grown and shifted. I think this is where optimization probably comes in to some degree. We can see that active accounts have grown over time, and we're looking at that year-over-year growth rate. But over here, the net new active accounts, right? Q3 going back to Q3 2020 to Q4 2021. This is likely where we saw a lot of panic, where some of these markets are currently saying, like, hey, things are down and not going well. Excuse me. I understand this is going to be an unpopular opinion I'm about to share, but I don't really stress out completely about these kinds of things. I think that, like, as long as the active accounts are growing and spending more and doing more transactions, then what I want to understand is the efficacy of these net new accounts, right? If you're growing at a slightly lower speed from a net new perspective, but those net new accounts are using the app more often or engaging with their services more often, for me, that's okay. I'm looking for a vertex point that keeps things equal, right? So as long as that's the case in subsequent quarters, then I'll feel okay here. I'm not going to read everything on the screen, of course, again, because I don't think we need to. Customer engagement, however, obviously, number of payment transactions is up. Customer engagement, TPA, is up. Obviously, I'm not going to talk about more of the CAGR stuff. I think we already covered it. And then these are just some standard things, right? Like, obviously, cash flow is super strong in Q4. That's something I was pretty excited about. Free cash flow as a percentage of revenue, though, look at that. 22% in Q4 2021. It was actually 25% in Q1. That's interesting. CapEx as a percentage of revenue, only 3%. I mean, that's pretty good, right? I like to see stuff like that. Capital allocations, right? Now, here's some interesting stuff that I'm going to probably cut it on after this. So for the full year 2022 guidance, this is where essentially they have an opportunity to say what they expect to happen from their own numbers, okay? And this is typically where we see the panic always happens. Excluding eBay, we've already explained why this is the case, revenue is expected to grow approximately 19 to 21% on top of the 29% in 2021. So one interpretation of this right off the bat is growth is slowing. Another interpretation might be to go back and understand, well, why is it slowing? And is it creating a more consistent, better customer experience? This is where a lot of the pricing action is going to take place. Their net revenue growth on spot pricing is somewhere around 15 to 17% approximate. Non-GAAP EPS, approximately $460 to $475. And free cash flow, give or take, about $6 billion. Free cash flow, $6 billion. That's not nothing. That's not insignificant money, right? So those are the highlights that they called out here. Q1 guidance, same thing. I'm not even going to worry about Q1 guidance. And then they have some real deep financial stuff here. I'm not going to get into all this. I want to show you these definitions. I'll leave this on the screen for just a minute in case you want to read more into it. I like doing this. If you like when I do this, please let me know in the comments or like the video or whatever. I love going to the details of the numbers. I spend a lot of time really doing this. I read all the reports that come out. I enjoy breaking it down. So if this is valuable, let me know. If it's not, let me know that too. I don't mind. But in the interim, I think here's the way I'm treating this. People are going to keep swiping cards, transferring money, investing. They're going to be looking for ways to have a digital wallet. Whether PayPal is the best in class, I don't know. Would I consider PayPal as an investment in my portfolio? I think I would. I don't currently have direct exposure here. I believe it sits in a number of ETFs and indexes that I might own. So I'm sure I have some exposure, but indirect. I do own a ton of Square. I am way behind on the price on that. I have no problem saying that, to the tune of many tens of thousands. But look, here's the reality. I think they've done a good job explaining what happened here. I think that whether this warrants a 25% drop in price, I think that's up to you as an investor to make. My value here is, do I think this company is doing well, growing, and providing free cash flow? I do. I think the numbers were not super concerning to me. If I didn't know that the price was down 25%, I'm going to be really honest, I wouldn't have guessed that. Absolutely would not have assumed to be down 25% at last check. So with that, I really appreciate the time. I'm going to stop sharing the screen. Thanks for watching. As always, I appreciate any feedback, comments you give. So let me know. And until next time, thanks so much for watching. And everybody have a good day. Good luck out there. Thanks all.